Hi, everyone. Let's have a great week, partial week. Alexander, how are you? Hi, NG. You like Euro Kiwi, long or short side? Hugo, how are you doing? Good luck on that pair. Maybe Blake will cover it. Kevin, how are you? Shooter, what's new? NG's long that pair. Doing okay, Alexander, for 5 a.m. So let's take a look around. I think one of the most interesting things that happened was what happened in cable. And a lot of these things are happening in European trading hours, but just take a look at cable. And it's getting hammered now. So, I was surprised last week uh, that we came off before taking out important stops. And this is why it was important. It was this high that held for a long time. We finally got to it, and we're putting in a nice reversal day. I think it could be short this thing, looking for, maybe 39 and a half. Okay, and that has also kind of turned the euro pound market a little bit. Maybe we're going to get A, B, C. Uh, I still think there's one more shoe to drop in the euro as well. So far, a failing rally. I'm thinking that we take out this low and trade under the 121 handle. Okay, so but cable was the most interesting reversal. Um, Aussie, I still think has one more low to make under the 76.80, anywhere between 76.50 and 76.10 is my view. And that implies everything I talked about in currencies is that we're going to challenge Friday's highs with some type of 1-2 ABC type of trade. I'm not sure what really lit up the S&Ps, but what an opening. And we should be able to make new highs here. Not that far, 14 handles away. But look how far away we are in NASDAQ comparatively. Okay, so I'm going to be real interested when the S&Ps approach. I still think that we could see the 4,300 handle on that. And Bitcoin sure trying to hold. Okay. Is this going to be a bottom or a continuation formation for one more drop? IDK, which means I don't know. Could go either way. 36 was my target from up here. So we'll see if there's another shoe to drop. On CNBC, Carter Worth, who's a good technician, is looking for a retouch of the high around 20K. And he's a pretty good technician, but we haven't broken down for that to happen yet. Hello, Paul. How are you doing today? Oil's making new highs, new recovery highs. Finally taking out this high, kind of looks like the pound. We'll see if we get a reversal, but the theme I'm looking at is that there could be one more pop in the dollar. Maybe, back towards 90, 80, 91. And okay, so you saw the stop hunt, very nice. I love trades like that, but I was getting rapid eye movements up here. Not enough confidence just to throw a limit order in just above the high, because you never know if it's a stop hunt until you can see there's no follow through. Hard to come up with a contingency order for that. Okay, sell the pound after it takes out the high, right? And then there's no way you could enter an order like that. Okay. Anyway, this happened, I don't know, about 6 hours ago, 8 hours ago up here. And see if there's anything else really catching my eye. And that's really about it. It's really key. And with this kind of opening in the S&Ps, it could survive another pop in the dollar. If it was fragile, maybe it couldn't, but I think it could. And then maybe the real last part of the melt up happens with the dollar making one more new low and, taking out that 89.20 level, which I'm sure there's plenty of sell stops under last week's low and definitely under January's low at 89.20. So it's definitely summer in the desert. I know because, it's warm out at 5 a.m. And Blake, here we go. Flip-flops for 5-6 months, huh?
Oh yeah. I mean, it's good morning, Dale.
The oven is open.
I actually wear flip-flops all year round.
Oh, okay. Well, yeah. Well,
I don't ever really stop. So so how you doing?
Okay, your feet get cold in the winter though if you do that, don't they?
Yeah, I might have to put some
You're
socks
tough.
on. I might have to put some socks on from time to time.
Yeah.
Hey, I don't know if Stelios is here. Stelios, are you here?
Yes, I am. Hello.
Hey, do you mind chatting with Dale for just a moment? I have unfortunately, it's weird enough. I have my littlest dog just scratching on my door, and I'm like, man, he never gets up at this time. Like he usually waits. He's pretty good about it, but that means if I don't let him out, I'm gonna have an accident.
Go, buddy.
I'll be back in just
we got
2 minutes.
No
Hey, Stel, how are you, buddy?
I'm very good. I'm very good. Let me take.
You have a good weekend?
It was good. It's the first proper summer weekend. So let me take the screen. Yeah, all good. And
you blow up the pool
3.5
for the kids?
Yes.
Wow,
3.5 weeks more of school, and then it's a summer holiday. So I think we're all waiting for that.
All right. So God, you had the patience of Job writing this down, and important support here. Is that what you're going to tell us?
Well, yeah. I mean, for people who have been following, I have been short. I took out my whole half position in the beginning, and then the rest of it. Not at the lows. I didn't catch the lows, but it was damn close. And
nice trade, buddy.
Thank you. I'm worried a little bit because we got CPI from Germany yesterday, which was at 2.4% year on year, big jump. And in the Eurozone today at 2% year on year, which is the ECB's target. Obviously, they hit it. Doesn't mean they're going to do something. But inflation is creeping everywhere. No matter how they measure it, it's creeping higher. And, even Elon Musk said he's raising prices of Teslas because of increased costs for materials and all that. So, things are going higher. Pretty much everything, oil is driving this a lot as well. We're at 68.5, nearly 68.5 bucks on WTI. Who could have imagined?
Finally took out that high from many months ago or a few months ago.
Yes. Who could have imagined that when last year we're trading negative? Obviously, the negative prints were just a game on futures, but still, it's been just a straight up move. And, oil, commodities,
everything,
copper, everything is just going higher. So my worry is, we're seeing inflation. What are the central banks going to do? So I think I want to be short bunds again for sure. I'm just, we've had this bounce here on support, so I'm just going to leave it for now. But I think it's unavoidable at some point. Rates are going to have to go higher.
Stelios, and thanks guys for covering there for a second. You were talking about inflation, and one of the charts that I was looking at this morning is crude. I mean, crude's hitting a new trend high. We're above 68 bucks. And here I'll pull up the.
Just in time for summer driving season, Blake.
Yeah. Well, you know what? It's funny you say that. Ironically, it is summer driving season, yes, but we are also coming out of a pandemic, and there's a lot of pent up demand. I mean, there is. There's no doubt about it. I mean, like, for example, we didn't vacation last summer, right?
Yeah.
How many people didn't vacation last summer? Probably the majority. Well, I would
millions.
I would say the majority of Americans. So, you can't get we were going to meet our friends out in Yellowstone. You couldn't you couldn't get an RV because we don't have one. We'd have to rent one. Couldn't get an RV. You couldn't get a spot to stay at a national park. So yeah, I mean, the summer driving season is going to be ginormous, and so you got crude oil that's breaking higher, and you can see we're above 68, and with higher commodity prices, you know, what is the central bank going to do? So Stelios, what do you think is going to happen? I mean, you want to sell, you know, booms.
Yeah, it's a good question. You know, the problem is central banks and governments do not want yields to go higher. So you can probably bet that if we do see yields starting to creep higher, they're going to try and do something, you know, buy more. Buy more bonds, buy everything they can, which is just going to exacerbate the problem. So I think eventually it's unavoidable. They're going to have to do something with rates. They're going to have to tighten, but it's going to be probably not now. They're going to wait and wait and wait.
They're going to end up being behind the curve, right?
Yes. Well,
so then they're going
in a way they're already behind, aren't they? In a way.
Sure. Well, you know, but
bond vigilantes won't wait for the Fed.
Yeah.
Market participants won't wait for the Fed to act. They can take the long end. You know, what's the Fed control? Short-term rates. I mean, they do have influence on long-term paper through their, you know, buying programs. Yeah. But, you know, I think it's going to be hard to create demand for a long bond with the dollar under pressure and inflation numbers like this.
Well, the risk, I think, is I was looking at a chart. Somebody tweeted it this morning about the Bank of Japan holding, I think, 50% of JGBs or something like that, of all outstanding JGBs, which is incredible. So, and the Fed is buying more and more every month. You're going to get to a situation where they're going to be the main buyer and the main holder, which is.
I wonder what the percentage of Fed holds compared to like Japan. I'm sorry.
No. I was just more laughing about, like, you know, at what point do you lose the, you know,
discovery of a free market?
Yeah. Well, I mean, I think we're already there, aren't we?
Yeah, we are. Yeah.
We pretty much are. Yeah. I mean, that's kind of what the point I was, you know, trying to get at here. I mean, at what point when you know, Japan and the Fed and, you know, every central bank is just they're the only buyers of your debt. So what happens? Does everybody buy Bitcoin at that point? So speaking of which, let's talk a little bit about Bitcoin. My son, who's, by the way, he's 14 years old, he's scalping the crap out of Bitcoin, just so you know. It's pretty funny to watch him trade. I mean, this is a 14-year-old kid, and, you know, we're talking about triangle patterns. If you guys were, how many of you guys listened to the week ahead video? If you listen to the week ahead video, talked about Bitcoin approaching triangle support. He was a buyer down here at 35,000, and he sold over the weekend at 37. He's like, "Oh, Dad, it's going to go higher." And I'm like, "Yeah, it might get to 39,000." And it got to, you know, 38 and change, or almost 38. I thought would hit a little bit higher, but I have a 14-year-old kid that's scalping cryptocurrencies. How crazy is that?
Did you tell him to use a lot of leverage?
But you know, the thing is when he's actually playing, he's playing in cash, but he's like, okay. Yeah, he's like, I made, you know, $5 and then I'd make $7, and I'm like, keep it going, man. You know,
it's in the DNA, man.
It's more than I'm more than I'm paying him when he's you know, for his allowance. I'm like, you know, scalp it away, man. So it's cool.
Yeah.
Right.
Yeah. Maybe you could put in some patterns in play.
Well, you know, maybe he can, and I'll tell you what, for him, it's much better than picking up dog poop.
14 in trading. That's just so amazing to me.
It is pretty wild. Yeah. Anyway, but it's kind of wild. But you know, going back to our conversation, where does that lead? You know, the markets. You know, when you have every central bank really really buying all of our debt. And you know, it goes back to Stelios, your like original conversation that you pretty much come back to is buying precious metals, right?
Oh yeah, I don't see what else is. Well, you could gamble with things like cryptos, but you know, I just like metals. I love them. What can I say?
Yeah, I mean, this is it has to drive these precious metals higher. And I look at gold, and if you let's go actually and take a real quick look at a weekly chart, and let's.
You know, guys, I have a question, and I'm hearing more people talk about it. Remember, I don't know, a month or so ago, after reading Jim Welsh's letter, who's on Traders Summit, the inverse relationship between, like, if gold is strong, Bitcoin's weak, and more people talking about this inverse relationship. Any of you guys have an understanding how or why there's an inverse relationship between gold and Bitcoin?
You know, that's a great question, Dale, and I think it is pretty easy actually. It is it's the difference between generations, right?
Okay.
And and I don't believe that'll stay true forever. I just believe it's true right now, where you have kids like my kid who's 14 years old, who's like, we were talking, and he's very, very interested in the markets, unlike, you know, his older brother who, you know, actually, I take that back. He's interested too, but not as much as my 14-year-old. And the 14-year-old's like, Dad, why would I buy gold? And I'm like, well, you know, a lot of investors buy it as an inflation hedge, and it's there's not as much of it as there are other assets. And, you know, we start talking about scarcity and blah, 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 and inflation. And he's like, yeah, but why wouldn't I just buy cryptocurrency? It's digital, and it just, you know, I don't have to hold it. You know, like, do I really have to hold like gold? And I'm like, well, you know, that's that it's when you can touch it, it's a little bit more tangible. And he's like, to who? And I'm like, okay. Right. I mean, I mean, I guess you can try to talk that generation into, you know, what's more valuable, an NFT or a gold bar. Like I'm gonna buy a digital, the only digital print of this piece of art, or I'm gonna go buy I'm gonna go buy an actual piece of art to throw up on my wall, right? I mean,
well, is different, right? And an NFT is not an actual physical thing, right? So
no, it's not. But again, it's like what becomes more valuable, buying a crypto asset, you know, whether it's an NFT or a cryptocurrency, or a bar of gold or a bar of silver, which
those are rhetorical questions. We're not having a serious conversation about it, right?
What's that?
Those are rhetorical questions, and we're not trying to have a serious conversation, right?
No, but try talking the younger generation into what.
Okay, if this is a
important.
criterion, I can tell you that I was stealing my mother's car at the age of 16 and going 100 kilometers away to have souvlaki. So if that is
wait, you drove to have souvlaki?
Yeah.
Why would you do that when you're a teenager?
Because there was a nice place
to go drink alcohol.
There was a nice place in Corinthos, and you know, we just needed an excuse to get a car and go somewhere we're not allowed to do so.
Oh, joyride. Yeah.
Yeah, exactly.
Anyway, look, I'm not here to argue. I'm here to say that is the difference when you're talking to a generation, because the original question was, Steve, was why is there a divergence between gold and cryptocurrencies? And I think a lot of that has to do with one asset. Is it viewed as a risk, or as a inflation hedge, or a risk asset, or what is it? What is, you know, cryptocurrency versus like gold or silver? I'm for one believe that gold and silver and these precious metals are going higher. And you look at it technically, I mean, gold this is a bullish pennant, guys. Any which way you slice it, right? So what that really means is a move above these highs, and we're talking a move towards 3,000 or 2,800. So any which way you slice it, that's what that looks like. That's 2,500, 2,600, excuse me. So, gold's moving higher, and, will that mean that Bitcoin, goes to 10,000? I mean, it could, because if you look at this chart, I got some people weren't too happy with me pointing this out over the weekend. That move in Bitcoin, that pennant right there, points to 10K and lower. So, but maybe there's your answer, Dale. You got one asset that looks like it's going to drop towards 10K, and you have another one that looks like it's going to go to 2,500. So,
yeah, I'm just not sure if it's generational. I mean, I understand their biases, but I don't understand why they move inversely to each other. I mean, I've heard explanations that, eventually, and then someone said it's already there, that Bitcoin will be backed by gold. But I think there already is a coin like that.
Well, I actually, we had some friends over this weekend, some neighbors, over for the Memorial Day weekend, and I was talking to one of the ladies there. She's like, should I be buying gold? And I'm like, yeah. That was basically my conversation, the answer to my to our conversation. But the thing about Bitcoin and gold, what happens like if some of these cryptocurrencies get regulated, which I think will eventually happen, right? Well, I mean, what government isn't going to tax cryptocurrency and regulate it? So when that comes home to roost, what are the crypto people going to turn around and buy? What do you think, Steve? Which Steve he's a huge investor of cryptocurrency.
Yeah, you
the biggest whale out there.
Biggest player out there, Steve. I mean, but let's jokes aside, if you're long cryptocurrency and your idea is, for whatever reason why you're buying it, if you're forced to get out of it because technically it's turning lower, or it's you're going to be taxed, and you're like, I just need to get out of this, what are you going to turn around and buy? Like, what would be the next natural selection as a crypto investor? What do you think? And again,
in my opinion, and I had this conversation a week ago with Dimitris. Dimitris, my friend Dimitris, the market maker. We both agree on the same. It doesn't mean that we're right just because the two of us agree on something. We usually agree on stuff anyhow. So it might be like an echo chamber. I'll agree to that in advance, okay? That the person that substitutes cryptocurrencies with gold is a bipolar or schizophrenic. There's no third alternative. and I'm extremely serious about it. I can't think of a serious person that's like, what should I invest? I have X number of money that I want to do one of the two following things. Either put it in the most speculative, volatile asset on the planet, or to the only acknowledged for 5,000 years store of value on the planet. So the person that is going to interchange those like their substitute for one another, in my opinion, needs a psychiatrist immediately.
So do you think that, okay, so then, and to your point, if somebody is like, oh, well, I got to get out of my cryptocurrency, let's go ahead and buy Tesla.
Yes, exactly.
Would that be the more natural selection?
I totally agree with you. Yes.
Oh.
The person that puts it on Bitcoin, for example, is the person that if he wants to get out of Bitcoin and doesn't want to go to any other crypto, is going to look for something like Tesla. Exactly.
Interesting. Yes. All right. Well, hey, I hear what you're saying. And now I know what has happened is we have some listeners that are saying, hey, maybe I need to go see a psychiatrist right now. Thanks, Steve.
Might be the case. Yeah.
So, Steve,
it's just otherwise you just have the wrong investment thesis. As simple as that. I mean, if you really believe that the two of them are substitute for one another, you have the wrong investment thesis. That's what I believe. I mean, and I call them as I see them. Doesn't mean that I'm always right.
Yeah, we will. Yeah, we'll. No, you're not.
Yeah.
But it's an opinion. So anyway, yeah, just the thing is I think that you can't make those assumptions about people, because people are going to have their own. They're going to have their own investment thesis, whatever it is.
Of course,
And
undoubtedly.
yeah. So anyway, let's what are you seeing right now in the market, Steve? That
I'm not surprised by the fact that we've had the continuation of dollar selling. I mean, that's the main trend at the moment, and we keep following it. We see the indices being still bid. I see some of the commodity currencies like NOK and CAD still being very well bid. So I know it's very, very early on the week, and frequently we see that price action during holidays, can be deceptive in a way, right? So there's no doubt about it. But on the other hand, I can't really try to fade things that just go along with what we've seen so far, right? So I think for the time being we remain at the status quo.
yeah, we were looking at on Friday, by the way, it was like the last day of liquidity we were going to get for the month. And you saw this break below this trend line. Actually, this hit the 618 retracement. So this move right here was very well this 618 was really well respected, and we bounced from it, and then we created a false breakdown. So as we were talking on Friday, we're like, well, as we held that 618, we're back above that trend line following the end of month move. To get a move to the highs or to a breakout area, made complete sense to me. Now what we're doing is we're holding a 78% retracement, and we're actually holding below these lows. So if we end up holding below the trend highs here, which, remember, this is a false breakout if you guys don't recall from last week. So last week we had a false breakout, we had a false breakdown there below. Both have led to an opposite move. But if we fail to make a new high here, if we fail to make a high above 122.80, now there's a risk of a move back below, in my opinion, back below 121.50, and possibly below these levels. But and you can see we're just kind of back to the resistance, the previous resistance, struggling it here again. So a lot of false breaks. But the what I think we have to pay attention to, and this is what Dale was talking about when we first came on, is look, stocks are near all-time highs. I mean, equities are near all-time highs once again, and it does look like we're going to hit new highs today.
Where's the backside of that wedge coming in down the road, Blake?
4,300.
Okay.
This would be 127% extension of the move down.
Thank you.
Yeah, I mean, look,
because I've seen that a lot. You break a wedge line, and then sometimes it could come back to tag the underside of it.
I mean, how often have we done that as of late? Yeah. I mean, we've done that a lot, and this is a bullish market where we have higher highs and higher lows. So I would expect that we make a move to 4,300, get everybody chasing the market, and then we probably reverse back to 4,100, still making higher lows and higher highs, right? So we do have Canadian GDP coming up. So let's pay a little bit of attention to what's happening with the CAD. And let's pull up the calendar here. All right, stand by. And then I know you have a guest coming on.
Yeah, and I can't find, but I wanted to ask you guys as a prelim for this interview, and I'm glad John is with us. Are you familiar with Darvis box? Any
I'm
of you
not.
guys?
No, I'm not.
No.
Modified Darvis box. So, we're going to be able to present a different tool that a lot of people, I'm not, I'm looking forward to, seeing it and learning about it. You never could have too many tools in this business, but there you go. Scott uses
GDP.
Darvis. Yeah. Okay.
So the GDP numbers have just they're coming out really quick, and quarter numbers are a little weaker. Revisions are weaker as well. Month over month they're a little stronger, but
That's nothing.
yeah, and annualized GDP is a little weaker as well. It's not moving the market, but anyway, it's worth noting. One of the things that's kept the Canadian so strong going into today, and really is, you can see how we're just kind of breaking down here, is obviously the move in crude. I mean, we've got crude that's above $68, and we're at 68.50 right now. So as long as crude continues to be strong, I think the risk is for us to move below 120 here. So, but anyway, I'm sorry, Dale. I didn't want to step all over you. It's just that data was coming out. So,
ouch. You stepped on me. Ow, my big toe.
So you were talking about the Darvis box.
Yeah.
Okay.
Yeah.
Is your guest here?
Well, I'm looking for John. John, can you text something and tell us what you're registered under? I've tried MDB and I don't find you. Oh, under your name.
There is.
Under your name. Okay.
All right. Well, with that,
All right.
I'm going to let you take over. And guys and gals, I appreciate you all being here, and we appreciate your continued support. So Dale, it's all yours. And
thank you, Blake.
Yep. Thank you.
All right, everybody. I'm happy to introduce Modified Darvis box. First name John. How are you, John? Welcome to FACE. I know it's your first time here, and looking forward to learning. You can teach an old dog new tricks. I'm an old dog, all right, and interested in learning about this. One of my mentees uses it, so he never talked about it before. But very nice to meet you, John.
Nice to meet you. Can you hear me all right?
Yeah, got it. And your orange MDB box is on the screen. And, before we get to Darvis, I'm always interested in how people evolve and get into the business. You want to tell us a little bit about your origins?
Yeah, certainly.
Okay.
And just a sec, I'm checking to see if I've got any webcam. I just shared my screen. So hopefully everybody can see a little. I did a few PowerPoint slides to help.
I see it. How I Made 2 Million by Nicholas Darvis.
Yeah, it's a welcome screen.
You can now share your webcam as well if you want. I just enabled it.
Yeah, let's see here. There we
Oh,
go.
there you are, John. All
okay,
right.
great. Yeah, I don't do. It's always a little bit of a practice to get back into the which button on Zoom to hit.
Yeah.
So let's get into this here. So I've been here. Here's a little bit more about me.
Oh, you're Garth.
What? Yeah, I know, right?
Yeah.
I tried to lighten up a little stuff because some people know of the book, How I Made 2 Million in the Stock Market, which is the yellow. I've got the yellow cover version, but there's other versions. But I've got over 20 years experience trading. I've made every mistake you can make, I think, like everybody else has.
Yes.
You don't learn by succeeding, you learn by failing and then improving on what you did wrong.
That's a pearl.
Yeah, exactly.
You do. I mean, you do. And, hardly anyone comes on and talks about it. Our biggest lessons are our biggest failures.
Exactly. I made my first trade in 1995. My parents both worked on Wall Street, but that doesn't mean you know a ton. I then got really interested in investing and trading during the internet bubble of 98 to 2000. I was in grad school at that time, and it was the most exciting period because if a company announced that they had a website, it would double overnight.
Yeah.
So very exciting times to learn. but did I really learn anything? No, I had no idea what I was doing, but I was lucky to come out of it with profits. And the best thing I did with my profits was I paid off all my student loans back then.
Smart.
Yeah, reducing debt was the best thing there.
Okay.
But some of the problems, you know, that bear market afterwards from 2001 to 2003 or so was so vicious. And, you know, whatever you make during the uptrend, you're losing on the downtrend. And so you gotta find that method to keep the money you've made during the good times. I became a CanSlim guy using the How to Make Money in Stocks by William O'Neill, which many people do.
He's the
turn to that.
Investment Business Daily guy.
Yeah, Investors Business
IBD.
Daily.
Yeah.
And really, that was the first inklings I had that there were universal things that most big winners have. And they're, you know, what most people do, in my opinion, are they're searching for a strategy and a consistent, repeatable strategy. The CanSlim system worked well for me because as I applied it, and because it's got looking for
Relative
per share
strength.
growth rates.
Yeah, relative strength versus weakness helped you with trade selection, right?
Exactly, relative strength, and it really shows you how to be a lot more selective in picking stocks that have higher probabilities of success. I had my biggest winner at that time in the next bullet there, Hanson Natural. I don't know if your audience knows Hans. It's currently Monster Energy, ticker symbol MNST.
Okay, I remember when it was the other.
Yeah, exactly.
Yeah.
Well, Hans, all the CanSlim searching, which I did to get that system in, led me to this one stock. And so I bought it. I had $26,000 at the time. Everything, it checked every box that you could want in it, growth rates, etc. So I leveraged up my account literally 100%, and I rode that 26,000 into $1 million.
Wow.
From 2004 to 2006. And let me tell you, that was incredible because you don't think that that's even possible.
Let me ask you this. You know, I talk about it's one thing to make a great call. It's better to make a great trade. The toughest thing to do is a great hold. Tell us your self-talk on being willing to give back profits for higher prices.
Well,
and be able to sit for 2 years with something.
Well, that's conviction tools. And that's what, in my opinion, a lot of people don't have.
Yeah, you're right.
The tool to have conviction. And the way it was for me, and I'll flip, was I use fundamentals. So hopefully you can see an Excel screen.
Yes.
So I'm a techno fundamentalist. I look at charts and I look at fundamentals. I just did Hans-H, which I have H for historical. These were the growth rates during Hanson Natural's run. The top line, green line, is earnings. The bottom green line is sales. It had a multi-year run of triple-digit earnings per share growth. It was this forecast and these results which allowed me to sit, because every day you'd look at the numbers, they were just going up, and that's because it had a great product. It was expanding, and there was really no stopping it.
You've answered my question. It was the fundamentals that kept you in the trade, because I'm sure there were things that you saw technically that said, "Hey, you know what? We could have a 50% correction from here."
Yeah, and I was
Go ahead.
Oh, and I was working in a full-time job. I was a territory manager, so I traveled a lot.
Okay, that
so
helps.
when you can't look at the chart every day or watching the ticker, then you got to rely on something else. And
Exactly.
for me, it was that conviction belief. Now I sold out for that because I finally cracked under the emotional pressure. I'd never had a big winner like that. I didn't know what I was doing. I didn't have any mentors or anything. There was no Twitter back then. So I cracked under that. If I had held 3 more months, I would have doubled again.
Well, yeah, it's yeah.
But
Congratulations on that trade. I know that it's, you know what I say, John, you don't expect perfection at the crap table.
Exactly. But now things get interesting after that, because then you get into the global financial crisis years of 2008, 2012, et cetera. I gave back a chunk in 2008 because, again, you don't know, it happened, but do you have that method, the consistency to find the next one and then the next one? And that's why a lot of people will make a lot of money in a trade, but then they'll give a lot back because it's that process.
It could be luck.
Yeah. To have a big
You
winner
know,
could be.
you know, you have a 50-50 chance of being right and lucky
Yeah.
on any trade, right? You bet it's going up, you bet it's going down. You know, it's 50-50 kind of, isn't it?
Exactly. And so you're looking for tools to build conviction and also to raise your probability of success. And that could be volume, chart patterns, fundamentals, etc. You know, the more things that are check box that you're checking off, the higher the probability of success. So I gave back a chunk because, yeah, I was trying to find the next Hans. The problem is they don't come around that often. So in searching for that, yeah, I lost some money, and I think the keys from that period was, you know, you learn you can make big money, but then you also learn you can lose big money.
Yes.
And the key is to try and do one, but not the other.
So how did you discover Darvis's book?
Yeah, so it came back to that consistency, the process, the methodology, because I was frustrated that
Giving
my
back
trades
profits.
yeah, and everything was still too random. You know, what's your system? What's your process? So I as you can tell, I harp on this a lot. So I adopted the Darvis method because I found that original CanSlim just wasn't working well for me. I learned about myself. I don't see certain chart patterns. I'm terrible at drawing trend lines and sticking to it. When price hits the trend line, am I supposed to be buying or selling? I don't know. Moving averages don't do a lot for me. I use moving averages as a red light, green light system. If it's above, it's green light.
Right.
If it's below, it's red light.
Okay.
Because again, whatever you see on the chart is what are you supposed to do? What's your decision? So I saw in the Darvis book a method, which, you know, I saw it. To me, the Darvis book is a rule book. It's not a cute story. Everybody thinks it's a cute story, but it's a real diary of success. So if your listeners haven't read the Darvis book, I strongly recommend it.
Okay.
This is how I break down the Darvis method. So it's really that there's 3 states of trend that exist. You know, you're either in an uptrend, you're in a downtrend, or you're in a sideways box. And you can see on the right side the box pattern, right. Bearish and bullish. I don't really short. I'm too much of an optimist. So I make note of the ones that are breaking down, but I don't really short them because I'm terrible. I'll cover on the first green day.
Okay.
But so I'm a long only trader, but I'm looking for specific triggers, which comes along within these patterns. Whether it's going to make a new price high by coming out of the box, whether there's big green volume bars, which shows institutional demand. Okay. Maybe another trigger would be the great earnings, like Hanson Natural had. And so I found that my sweet spot is transacting on those particular triggers. And I've got some examples of a few. We can look in my chart program and I'll show you. But this basically is, you're either in one of these three states of trend, in my opinion. How I use it? Well, I modified it. That's why I chose my name. I really couldn't think of any other name to use. But Darvis did things in certain ways. He used daily charts to draw his boxes, his sideways. And the box is not magic. It's really just a framing tool. It's a range.
Right.
But he used daily charts. He got into fundamentals, but he didn't really talk about fundamentals, but I know he understood them. But again, I've broken it down into what can I do consistently and apply to every chart I come across. Does it have highs, big volume? Are the numbers really great, etc.? Darvis himself called himself a techno fundamentalist. I consider myself the same way. You got to look at both sides of the picture, in my opinion. Now, some of the extra techniques which I've had to learn is, yes, how to use moving averages, because they definitely can help. For example, a 401k trader who's at work, well, they might not have a system except shove money into their account every month. But maybe if they use like a moving average, like a 200-day crossover, well, it's a system and it's repeatable and they can use it every time. But now there's all these cool tools like volume scanners and AI and all kinds of stuff. But
Yeah.
to me, I like to keep it simple.
Okay, let me ask you a question because, you know, I'm curious that, say, for example, you're a long-only trader and you get a breakout out of the range and your triggers aren't there. Will you not take the trade if, say, it's not a new high? Maybe it starts from a bottom. The box is near a low and ranges and bases and then comes out. It's not going to be at new highs or all-time highs. Maybe, you know, so if you have a breakout of the pattern, what is going to have you avoid the trade of your triggers if they're not there?
Yeah, that's a great question. Well, what they are that the Darvis way was only buying the all-time high.
Okay.
Well, you know, whereas I'm willing to look at stocks that are at various stages. But here's the key. It's got to have something which I can justify. For example, let's say it's 50% off its highs, but it has it came out with some news. It has monster volume. Can I justify that based on these triggers? Yes, I can. Okay. I can justify it.
So volume's your big one.
Yeah, volume. I think volume's, in my opinion, the most important of all of them.
Most technicians feel that way, no matter the method.
Yeah, exactly. Because volume represents the overall demand. And if I don't know everything about the company, I think it's a safe assumption that other people do. Okay. And then I can trust in some of their research. Well, I won't stop. I'll do my own research on it. But usually when you see that big volume demand, it's really telling you something. You may not know about it, but somebody else does. And I've got a saying I like to use: if the big boys want it, then I want it too.
Okay. Understand.
Yeah.
Okay.
So now I'm sure people want to see some charts, what this looks like. So let me flip to, here's my chart pattern. My chart program, TC2000. So I chart on weekly to draw my boxes. Like I said, Darvis uses daily. There's a million different ways to do it. Because again, all you're doing is, it's just a framing tool. Is there a range that you could frame? And then once you have a range you can frame, then you can judge against that. In the box, there's a top edge and a bottom edge. Well, now you've got two distinct areas of action zones. Maybe you want to take the box and chop it up into halves or quarters. Yeah, you could do that too. There's an infinite way of doing it. But this first chart, which you're seeing is the NASDAQ. To me, we are in a sideways range. And it's funny. Do we have a bull market? Yes, we do. But you gotta clarify that as to which market are you talking about. So the NASDAQ is going sideways. But yeah, it's generally a bull market. Earnings are good, that kind of thing. It's above its weekly moving average. The weekly that I use, pardon me. So to
What do
me,
you use?
I use a 14 EMA.
Okay.
Now, there's no secret sauce in this. I use it for a very stupid reason, because when you hit daily, the moving average doesn't shift in TC2000 from daily to weekly. So I wanted something that's consistent on both.
Okay. Got it. It's
Um,
based upon your platform's capabilities.
yes, that's correct.
Okay.
But again, remember how I use moving averages, red light, green light signals. I don't use them in
Right.
any other way. I do not use
Right.
them to transact. I use them to take note of things, but I don't use it as a primary trigger.
Okay. The key thing is, and a lot of these things work, the most important thing is how do you manage risk when they don't work? Like say you went with, do you get false breakouts out of boxes on both sides where, you have almost you even had volume and then it trades back inside the box. Is that your exit?
Well, I've got it. There's two different things you're doing. If you're looking to buy, if you're seeing a breakout in progress, well, you've got a defined level. And here's a great one. Here's RBLX. I'm long this one. And I've circled here. Now you can see the daily chart. So the first thing I did was I was watching it. It finally did a box per my rules, how I draw them. And that gave me a zone here about 76 or so. And that's a top edge. That's a potential buy zone. So what happened here, this green arrow is earnings. It announced earnings overnight. And I looked at the numbers and I plugged them into my Excel sheet. I thought they were fantastic. In fact, let me flip back. And we'll see. You can see on the earnings Excel sheet, it's going from negative string, but look at the forecast. Oh, and I purchased this data, by the way. The forecast is forecast to be 4 quarters of triple digits. And this zero might be a bad sell. I'll have to check that. So I've got at least 3 quarters ahead of 200% plus. On the sales line, I've got at least 3 quarters ahead. Yeah, this is bad data right there, not 34 million. But I've got 3 quarters ahead of triple digit sales. This, in my opinion, that's awesome. Okay. So earnings here, I thought it was great. I was a buyer down here. And then it triggered the top of the box, but I didn't really care because I was long about 65.
Okay, so you do vary from the rules. You will use them for support and resistance to buy and sell against, but since you're mainly long only, you will use the bottom of the range to initiate anticipating a breakout.
Yeah, and in fact, the bottom of the range really didn't come into my thinking at all, because remember my 3 triggers. It had the great earnings.
Yeah.
When you see this earnings forecast that's coming, I don't even need to look at the box. That's a buy in my, my humble opinion.
Okay, because if you go to the box, you would have had a buy on a breakout on that yellow candle. It would have been you probably would have had a little bit of regret. The next 2 candles are back inside the box where it almost looks like a breakout failure. How do you handle that?
Yeah, in fact, and this is why I pulled this example up. So right here, big green volume bar. Yeah,
you risk the lows.
The institutions want it. It had its breakout. I was very pleased with this, and I was expecting it to continue and go higher.
Yeah.
Well, it opened to a gap down. That's bad, very bad in my opinion. So I was selling. I took those profits at 74 right there that next day, because it's like, well, wait a minute. If it's so great, why is it gapping down?
Yeah.
So let's
Okay.
step aside and see what happens. 74, well, and it turned out selling was a good decision because there were still some sellers. Now it firmed up again. And here we go. Here's another breakout bar above average volume. Oh, and this blue here, that is average volume, but I have it shown as a histogram. So instead of a line, I wanted it to only show me, I can't do it now, but I wanted it to only show me covered up instead of a line. Because this way it's showing me the big volume.
Okay.
So it gave another chance right there. And I was frustrated with it. I traded it twice in here, but I didn't lose any money. These were all break even. And then it finally took off and made up its mind and went. So my adjusted cost here is still about 65.
Okay.
So it's turning into a great trade, a nice long, and now
The third time was the charm out of the
Yeah.
box.
Third time was a charm. Sometimes it takes a couple tries.
Yeah.
Now here's the weekly pattern on this. This is a box breakout pattern on the weekly, like was in the prior sheet here, right here.
Mm-hmm.
And here's that indecision on earnings. And then now, my computer's frozen a little bit here. But as you can see the breakout. I circled the volume day when it broke out. And now it's gone from 76 to 93, and it's looking good.
Okay, John, we're starting to run a little short on time, and I'm interested in, do you have a business model? Do you teach your methods? Do you work with people that are interested in, what you have learned? I went to, on Twitter, it takes you to another spreadsheet that shows performance. So I'm wondering, do you just trade your own account, or do you work with the public in any way?
Yeah. I trade my own account. I'm probably going to start a website of some kind, because I've been doing this method for so long. It's literally second nature to me now. And so I do enjoy teaching these concepts and principles, because again, it all comes back to what's your process, what's your method, can you apply whatever you're doing consistently? And so right now I don't have a website or anything. I'm just a private guy on Twitter, but maybe that'll change in the future.
Okay, so you could find John at Modified Darvis Box, correct?
Yeah, Mod Darvis Box
Mod Darvis Box,
and on Twitter, and probably we'll see a website or something come out soon. I'll just show your audience here.
Go ahead.
Oh, my program's frozen up. Whoopsie. Here's one more big winner. Again, earnings upstart. But again, the box breakout, big volume weekly breakout. It hits again and again and again. Here's another one I'm long, STNG. Box, 1, 2, 3, 4, 5, 6, 7, 8 weeks or so. Volume breakout of the box. Happened earlier, volume breakout out of the box. These patterns set up again and again and again. So it all comes back to a consistent application of technique to whatever charts you come across.
Well, John, it really was, I want to thank you for spending your most valuable currency, which is time, being with us and showing us your work. And when you survive an interview with me, you become my trading warrior, brother. Is that okay?
Well, yeah, it was great talking to you guys. And hopefully this gets people thinking about something new, which maybe they haven't seen before.
Well, it did with me. I just used to call it, breakouts and failures out of ranges. But was very nice to meet you and talk to a guy who now knows how to trade his way out of a box.
Precisely. And by the way, for anybody who's maybe likes the short side, boxes are agnostic. You can use them on the up and the downside. You can see here's an example of a box failure. It happens a lot more than you think. So
how about just a quick flash? You were going to show Bitcoin. I'd be interested in what your box is saying.
Oh, Bitcoin. Yeah,
Bitcoin and gold. Yeah.
I don't have a good, this is the best Bitcoin chart, GBTC, since it's a proxy.
I know that. Yeah.
But as you can see here, there's that big volume, but whoops, this is actually on the wrong there. But oh no, it didn't break down. It threatened to break there and then finally did on a big gap.
Yeah.
Bitcoin looks bad to me. I have no other insight than what the chart is saying.
Okay.
Whoopsie. GLD is my proxy for gold. Here's an example of it came out of a box.
Right.
But yeah, the volume is kind of lacking. So I've just been watching it, but this trend is accelerating.
Yeah.
So
interesting.
Yeah, and so it's like, yeah, what is the market bullish? Well, what market are you talking about?
Yeah, it's true. So yeah, we're talking about the NFT market, which I don't understand. And there's so many products I don't understand anymore. I feel like I've entered a parallel universe. But John, thanks so much. Really great to meet you and take a look at you're sharing your journey with us, and continued green for you, my friend.
Oh, thank you very much for having me. And if people have a lot of questions or stuff or something, maybe we can find a way to get them to me and I'll answer them as best I can.
Okay. And the best way to do it is at mod Darvis box. Thank you, John.
Thank you very much.
All right, buddy. Thanks for your time. That's a wrap, everyone. I'll see you for turnaround Wednesday, because we didn't. We'll see if we have that. Anyway, you're welcome, Monica. People are thanking you, John. And I appreciate you being here. You're welcome, Gorkum, Monica, Scott. See everyone tomorrow. Adios.